You think trading is very simple? You think it is about spotting a particular signal or pattern? You think it is about just placing the buy or sell body without asking additional questions? Pattern alone don't make a good setup. So it is really tough to generalize and come up with what it takes to trade profitably. Some people even think that trading is about the direction of the market. Some active traders believe that trading is about finding a good trade setup. But it is far beyond that. Trading is about managing the entire trading process, right from your analysis, your execution, your trade management, and beyond. I am Soji, and you are welcome to Soji Forex. I'm sharing with you 2 tips that will reduce your loss as a trader. 2 tips that will reduce your loss. Number 1, trade around the zone. Trade around the zone. So what are we saying in essence is, in your process of analysis, you identify your trade. And in your identification of trade, for instance, looking at our chart, this market has been in an uptrend from this area. And on the long run, this neckline, which is this low, was broken. This particular low was taken. And this led to a break of structure, which is a change of market direction. So now we know the direction of the market. But do we just dive in? And as well, we say whenever price is below our lower middle Bollinger Band, we are in a downtrend. And when it is below the 50 EMA, it starts to signify the downtrend. So we have established the trend, which is good enough. But because price just closes below the major Bollinger Band, or because the structure just gets broken, do we jump into the trade? No. We look for zones. You trade within your zone. In this scenario, your zone can be an order block. We have this bearish order block up here, which results to the break of this structure. So your zone can be an order block. It can be a fair value gap, which we call an imbalance. Like here, we have a whole lot of fair value gap here. So your zone can be a fair value gap. It can be an imbalance. The zone can be a smart money cube. And at the same time, the zone can be around a trend line. If you are trading using a trend line, your zone can be around a trend line. So it can be at your order block. It can be around your trend line. Price pull back to the trend line. You make your entry. And if you are using indicators such as we are having here, the EMA 50, which the close of price below it and our middle Bollinger Band signifies a downtrend, which means that in this scenario, we are only looking for opportunity to sell. So we can use this as our zone. So this indicator, you can see price pull back to our EMA 50 and then gave us a candlestick pattern. They both have equal bodies, which should be a Harami pattern, I believe. So they both have equal body. So we give us a beautiful reversal signal for a sell, and we enter this sell from here, and you'll be on your way to the downside. So you don't just, so do we now say because you have this bearish candle, you jump in? If you are to enter this, even here, it could have been a short entry. Why? Because this rejection is from a zone, is from a moving average. Okay, this rejection is coming from this moving average that gave us this hammer. So it is still from a zone which would have keep you in profit for at least 2 hours. And then we have this and these double confirmations which took this low. And at the same time, it can also be from your level of support and resistance. So your zone as well can be from your level of support. Just at this trade, we have a support here. Remember, support is not a line. Our area of support are zone. We have a support here. Price came, went, touched it, and then now, from what is happening here, this price went all the way down, came here, and this support now is holding the price back to the downside. So it can be from any of this zone. So because you see here now a bearish engulfing candle that just engulf this particular bullish candle, you just assume that it's a sell trade. No, it doesn't work that way. Or because you see this particular pin bar forms here, you just say, it's a buy. When you are seeing a trend line that has not been, you just jump in. It doesn't function that way. So it is important, regardless of the candlestick pattern that is formed, regardless of whatever you are trading, it should be in a zone despite that you know the direction of the market. So it is beyond knowing the direction of the market to considering the zone in which it is being formed. So you don't trade in isolation. You trade following the zone, following the area. Then number 2, the timing of the trade. Now the timing is very, very important. Just as the saying goes, that if you do the right thing at the wrong time, you'll get the right result. You'll get the wrong result, I beg your pardon. Doing the right thing at the wrong time will give you a wrong result. So the same thing is applicable to this scenario. So your trading must be made at the right time. So trade timing is very important variable for every trade. And what are we talking about? In essence, even good setup won't work on a wrong timing. No matter how beautiful the setup is. For example, the chart pattern, the candlestick pattern being formed on 1 hour time frame is not as powerful or more effective as that formed on H4 time frame, and the one formed on 5-minute time frame is not more than the one formed on H1 time frame. Think about it. So entering too early or too late can lead to loss. You enter trade too early or you enter too late can lead to loss. Some of us, we feel like the market is leaving us behind. So we entered our trade too early before confirmation. And as such, you get burned. Right? You just get burned by the market. Yes. Let's take here, for example. Here now we have a pin bar. Because, for example, this price is coming up. And because you begin to see this pin bar around, now suddenly you begin to see these pin bars around this moving average 50, EMA 50. What comes to your mind is that, okay, because of this pin bar, this hammer is a rejection for a buy. In our previous video, we talked about that spotting a pin bar alone is not enough for you to buy. You need to wait for a follow-up candle, which means you need another bullish follow-up candle to confirm your entry. So if you should have rushed to buy here, it could have been a loss because there is no follow-up candle for a buy trade. Now let's look at here, which means that you have the right setup, but you were not patient, you entered too early. You did not get confirmation, so you enter before confirmation. And in this other scenario, looking at this, still around the 50 EMA zone, Price now has closed, this bearish candle now have closed below the 50 EMA, and it is more or less an evening star formation, which should be a sell for us. But do we just jump in and sell? Now look at, we wait for this control candle, which give us a follow-up of this one, and from this body we know that this is a control candle. So if you should have make your sell entry at the close of this particular candle and your stop loss here, you can see how it plays out beautifully. So you wait for confirmation. You did not enter too early, neither did you enter late. It could have been a precise and accurate entry for you. Another typical example is entering too late. Entering too late. Like many of us will just believe that, the market has left us behind. It is going now. It is going now. Let me enter. For instance, we have this rejection here, which gives us an inverted hammer. This particular inverted hammer is being followed up by this bearish candle. So we have our entry here, our sell entry here. So you were not here when we entered this market for a sell, and then suddenly price is here, and then you just jumped in, or in between this candle you just jumped in, and now look at what is happening. Price now begins to pull back. Remember, we that entered based on this other candle, this particular follow-up candle, our stop loss is at this high. And you that came and entered here, will you be able to put your stop loss at this high? Which is too far. Do you have the capital if you begin to drag? But we can hold because we are very close, and it still eventually went in our favor. So some we enter too late, while at times we enter too early. So the timing is very, very important. So fourth can be difference between winning and losing trade. So in summary, understand that being profitable is about managing the entire trading process, from your point of analysis to your point of execution, considering each of these facts, to managing your trade by analysis. You can watch our previous video on how to manage your running trade, following our candle by candlesticks analysis and beyond. And I believe you have gotten value from this video. Please do not forget to like, to share. Above all, subscribe to the channel, turn on your notification bell so that you get notified whenever we publish our next video. Thank you for watching this video.